If you've been watching the charts, you know the past 24 hours have been absolutely wild. Bitcoin is back, and this time, it's not just a small bounce, it's a statement. After that brutal dip last week that had everyone calling for the end of the bull run, Bitcoin just rocketed back over $106,000. The big question on everyone's mind is, what happened? What's driving this sudden, powerful comeback? Well, spoiler alert, it's not another Elon tweet. It's not some random whale pump out of nowhere. The real catalyst is coming from a place you might not expect, Washington, D.C. That's right, the U.S. Senate, the same institution that almost crashed the market with regulatory fears not too long ago, is now indirectly helping it breathe again. Their latest vote to keep the government running has sparked a massive wave of new confidence in risk assets, and crypto is leading the charge. So let's break down exactly what happened. The Senate finally managed to pass a funding deal, avoiding a government shutdown. This simple act calmed down investors who were bracing for chaos. See, markets hate uncertainty. No shutdown means no panic, and investors absolutely love stability. Almost immediately after the news broke, we saw stocks jump. Risk assets across the board got a boost. And Bitcoin? It exploded. It shot back above 106K like it was just waiting for that green light. This move caught a lot of people off guard, especially the traders who were betting on a further price drop. They had gone short, expecting the market to continue its downward slide. When the price reversed so sharply, those traders panicked to cover their positions, buying back in to limit their losses. This is what we call a short squeeze, and it added a ton of fuel to the fire, pushing the price even higher. It's no wonder X, formerly known as Twitter, is buzzing about this move. The entire mood of the market flipped from Bitcoin's done to wait, is this thing really back in less than 24 hours? But this isn't just a story about US politics. What we're seeing is a fundamental shift in market sentiment. Money is flowing back into the riskier side of the market. We're seeing it in stocks, especially tech, and we're definitely seeing it in crypto. Why is this happening now? Because traders are starting to bet that the worst is behind us. There's a growing belief that inflation is finally cooling down, that interest rates might finally drop, and that the big institutional money, the smart money, wants back in the game. In moments like these, Bitcoin often acts as the canary in the coal mine. It's the signal asset. When Bitcoin makes a big move, it's often telling you what's coming next for the rest of the market. Just think about the whiplash we've seen. Last week, everyone was scared. The headlines were all screaming market crash, sell-off, major correction. Fast forward to this week, and many of the same people are suddenly bullish again. And that, in a nutshell, is how the crypto market works. It's a perpetual battle between fear and greed. And right now, greed is starting to win again. The fear of missing out, or FOMO, is a powerful force, and you can almost feel it creeping back into the market as traders hate the idea of being left behind. We can see this shift happening on-chain as well. Whale wallets, those large accounts holding huge amounts of Bitcoin, are starting to wake up. On-chain data is showing significant transfers, and importantly, we're seeing inflows to exchanges and wallets, not outflows. This suggests that confidence is returning, as big players are positioning themselves for a potential move up, not cashing out. So let's connect the dots again. The Senate vote didn't just save a budget, it sent a signal that the U.S. economy isn't on the verge of falling apart. In response, bond yields eased up a bit, which improved liquidity in the financial system. Think of it like a valve. The pressure was building, the government made a move to release it, and boom, liquidity started flowing freely again. And if there's one thing crypto loves, it's liquidity. More liquidity means more capital available for trading, more bets being placed, and more room for prices to run. That's a key reason why this rally feels a bit different and has more substance than a simple technical bounce. It's backed by a change in the broader macroeconomic environment. So what's next for Bitcoin? The immediate challenge is holding its ground. If Bitcoin can stay above that crucial $106,000 level, the next major resistance traders are watching is around $110,000. That's the line in the sand. If it breaks through that level cleanly, you can expect the talk of new all-time highs to flood your social media feeds once again. The bulls will be fully in control. However, we have to look at the other side too. If it fails to hold 106K and drops back under 100K, brace yourself. The sentiment is still incredibly fragile. The same traders who are cheering today could easily flip bearish tomorrow if the price shows weakness. That's just the reality of the market we're in right now. Nothing is guaranteed. Still, this powerful move says something very important. The market wants to believe again. It's searching for a reason to be optimistic. So yeah, Bitcoin's rebound isn't random. It's deeply tied to politics, liquidity, and a renewed sense of confidence. It's one of those rare moments where the suits on Wall Street and the degens on crypto Twitter are actually looking at the same signals and coming to a similar conclusion. Money is moving, risk is back on the table, and nobody wants to miss the next potential wave. The ultimate question remains, is this the start of a new sustainable leg up, or is it just another fake-out rally before reality hits again? Only time will truly tell. But for now, one thing is clear. The bulls are smiling, the shorts are sweating, and Bitcoin is firmly back in the driver's seat. Thanks for tuning in. This is where the charts meet the chaos, and every headline could be your next move. If you got value from this breakdown, make sure to hit that like button and subscribe so you don't miss our next update. See you in the next one.